Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's whipsaw price action ended with heavy casualties on Friday, reflecting the intense market volatility after Friday's employment report in the US revealed fewer jobs added than expected and heightened concerns that the US Federal Reserve may be slow to adjust interest rates. The weakness intensified on Friday after the US labour market report showed the economy added 142,000 jobs in August, with the unemployment rate falling to 4.2 from 4.3. Following the data, traders will likely anticipate a 50 base point rate cut at the Fed's meeting in September on the 17th and 18th, with fewer expecting a 25 base point reduction. Looking at the technicals with an engulfing candle and also looking at the pressure on the 60-day moving average, which is seen around 66.50-55, could reveal further supply or weakness at the start of the week. Traders should remain cautious, closely monitoring signals and adjusting risks as accordingly, just in case we do see the break of 66.50, as this may reveal further weakness and down towards the region of 66 cents and reassess from there. If we do see a bounce from 66.5, then the immediate target looks towards 67.10.15 and on towards 67.65 to 75. But the technicals are heavy, so I do feel the caution to the downside. And as mentioned, bearishness may start at the beginning of the week. The euro also reflected on a very heavy session and ended posting a bearish engulfing candle in New York as well. Although the US dollar, which measures the greenback strength against a basket of 6 major currencies, whipsawed and ended near enough flat at 101.15. Looking at the technicals though, we're not fully broken down as the RSI is holding on the midway point and therefore could see a bounce anywhere from the support levels seen around 110.20.45, and while intact could see a recovery or correction back towards 111.40.45 and eventually back onto 112 and reassess. The whipsaw price action for dollar yen, well, the market nearly took out that key level of 141.60 but managed to hold. Given the fact that the market did bounce slightly towards the 142 handle, the bearishness is still holding. And looking to the weeklies, we can see that the market is still remaining vulnerable to the downside. Now, as I mentioned last week, a break of 141.60 could give a trajectory down towards the region of 136 to 138. So do be cautious and adjust your risk management accordingly, as I do anticipate much volatility to the start of this week. Sterling also posted an engulfing candle and now looks back towards that key level of 131.0510. Now do note the break there could give further losses and see a move down towards 129.70.80. Nevertheless, I feel the market is still preparing itself for a bullish move that could extend eventually back to 132 to 134. So if we do see a drop towards this bottom side of the range, anywhere close to the region of 129.70.80 as mentioned, and therefore could see the rise eventually correcting itself back up. A whipsaw price action and another engulfing candle, as we can see here, or a bearish outside range day that has put a little bit more risk to the downside for the precious yellow metal. However, we do need to see a break of 2,480, and if so, would give further risk towards 2,486 to 88, where bargain hunters are likely to be hanging around. If we do see a bounce off this level, then I feel the market's still very much intact to take the challenge back up towards 2,520 to 2,537 to 42. Wrapping up with oil, the market continues to weigh on the support level and crushes the level of 68.60 and now puts a further risk to the downside and exposes the region that we see back here in January 2023 and also in May. If these levels around 65, 55, 65 does bring back a bullish response, and we are extremely oversold on the weeklies as well as the dailies, then we may see a correction or a bounce that is very much due and look back towards $71 to $73 as a potential target. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new week.